Sheila, I'm going to start with you. Hi to you. Can you share with us, if you look at InsurTech, if you look at artificial intelligence, what solutions do you see? What interesting developments do you see? What can you share? Floor is yours.
Thank you, Petra. And just briefly, Consumers International is a member organization for consumer groups around the world. And just briefly to your question, Petra, we have seen lots of exciting insights or solutions coming out that are AI-based or machine learning-based. And some of the interesting ones have been end-to-end task management systems, whereby you see the entire process from underwriting, from pre-sales, underwriting, post-sales, and the entire management process is fully augmented. And this has been quite useful, especially as we see from an EY report from 2021 that states that at least 69% of consumers prefer to buy their auto insurance in particular online. And that is the same across some of the other insurance types. So having chatbots or AI-based solutions that manage the entire process provides a better experience for consumers, especially as we see more younger consumers trying to take up insurance services. But other interesting solutions have been around still AI models, customer segmentation solutions, and these have come in handy, especially in terms of inclusion and designing particular products for particular markets or customers that would ideally be excluded. But even besides that, we've seen that more consumers, up to 88%, of insurance consumers demand for more personalization. And with using AI models for customer segmentation, we ensure that we do have products in place that are designed towards the particular needs of consumers. And this is really useful mainly for the opportunities around inclusion, but also ensuring that consumers are getting value for their money and building more confidence in the products that are coming up. I think finally what we're also seeing, which is interesting, and this is particularly in emerging economies, has been around use of bundling or coupling big data analytics with AI models to come up with agricultural index insurance, which has been successful to a certain extent through the existing partnerships, but also very key in ensuring resilience, especially for low and middle income consumers in the agriculture space, where there is need for unique products customized for them to ensure that they be able to cope or recover from some of the weather shocks that happen. So in terms of new and interesting solutions, we have those and others. Really, there are quite a number, including optical character recognition, but those are some that we saw that provide some opportunities around better customer opportunities, a better process for the consumer, inclusion, and also looking towards resilience opportunities. And with these also come risks, and some of the risks that we've seen have been around fraud detection and management, especially from a previous report that we did in 2021 with consumers. And they cited fraud as one of the key issues that they see across financial services. So even with these new models, there are always opportunities or leeways for fraudulent activity, if not checked, but also issues around privacy and data protection that can also ensue in terms of how this data that's collected in mass is used. So I'll pause there for now and turn back to you, Petra.
Thank you, Sheila. And I think you touched almost on all the topics in the poll. So let's see what the audience does. Maybe to you, Sophie. I think in the previous round there was clearly questions about AI, ML. There was also a lot about protection gaps. So let's bring those two together. And what is their potential? What is the potential of InsurTech helping to close protection gaps?
Thanks a lot, and thank you for having me. I think if I have to answer in one line, I'll say the potential is real, but we're far from having realized it. Now, if I unpack that, I'll start by saying, of course, you've heard this morning the protection gap is huge. So that raises the bar already. Jean mentioned if we think about low-income household, that less than 10% of the world's adults have access to any kind of insurance. So it's huge. The protection gap is huge. If you look at health, in Africa, only 7.9% of adults have a health insurance, and in only 4 countries, you have more than 20% of the population. So it's huge. I think I'll add actually that on climate adaptation products for vulnerable populations, that's the only way, that's the only subsector of the financial sector where insurance is actually leading the path. So that's actually quite interesting. We did a landscaping of products, and there's much more than, for instance, dedicated credits, etc. But of course, the gap is still there in volume. Now, why does that matter before going to InsurTech as a solution? It matters because we heard it from Vicky and others this morning. There's nearly a societal need to address today's problem with all hands on deck. And financial inclusion, including inclusive insurance, is a key enabler of development outcomes, of development goals. You heard Jean, I think, talk a lot about the macro level benefits that come from insurance. If you look at low-income households, these benefits are massive. I think we mention often resilience, but it goes well beyond. For instance, insurance actually contributes to climate adaptation, mitigation, and a just transition at the household level, because it's often with the proceeds of an insurance payout that a better livelihood, a more adapted livelihood is being built. Insurance also contributes to a more inclusive world, which is also an imperative today, because it helps smooth consumption, SME growth, access to education and food after a shock. So it's really fundamental. Now, there's a huge gap, and yet it's an imperative to fill that gap. Can InsurTech be the solution? So we see a huge stream of innovations happening. I'm going to talk about those to complement a little bit what Sheila said, those that help more with the low-income household and small firms that I mentioned, and give you a sense of the types of innovation, and then talk a little bit about how we scale them up. So just to give you a sense, all the new innovations really leverage data, but also innovative distribution channels based on technologies. For instance, Mercado Pago is a digital bank in Brazil and in the rest of Latin America, actually, that leverages its relationship with Mercado Libre, which is basically the Amazon of Latin America. It's an e-commerce platform, to offer warranties to buyers and sellers, but also to offer life and accident insurance to customers, leveraging the data trail that they create through their purchases on the platform. Inclusivity Solution is another one that offers hospitalization insurance through Orange Money. So they go through mobile money providers in Côte d'Ivoire, in Senegal, etc. And so they leverage, again, the phone data trails that are being generated. In Brazil, quite an interesting case is Uber, that basically has used data on behavioral economics from their drivers that connect with driving behaviors to offer them car insurance, and they accompany that with real-time monitoring of driving as an early warning system. And then, of course, as I mentioned, ag insurance is very developed, and you have lots of examples. I'll pick one that I really like. It's Pula. And I like it because it's one of the few that really managed to scale rapidly. So they went from 62,000, what they offer are area yield index insurance in Nigeria and Kenya. In Nigeria, they went from 62,000 clients in 2018 to more than 600,000 clients in 2020. So they increased tenfold. And this was really by understanding why people were not buying their insurance. When they started, they had 20% penetration rate, despite the insurance serving a real need, being totally subsidized, being offered through mobile phones, so very convenient, and yet nobody was buying it. So what they did is really understand through analyzing alternative data, customer-level data, why people were not buying it, and that led them to really change the product very significantly, including the distribution channel. Actually, mobile money was not the right solution, and they went to agents. So there's a lot of solutions out there, but if you really look at volumes, if there's still a protection gap globally, it's because they haven't scaled. And many InsurTech solutions still target high-income households and rich markets. So we need to move forward, and it's very important, as I said. In fact, the business needs is enormous. I'm just going to read you two numbers. CFI, the Center for Financial Inclusion, says that the untapped market is about 3.8 billion people, 3.8 billion potential customers, and the IFC estimates that just for women, the potential opportunity equals $1.7 trillion if you were to serve them adequately with insurance. So why is it not happening, and what can be done? And so for me, there's a lot of problems. You all know these. But for me, at the end of the day, it's really about finding an equilibrium between affordability on the one hand and profitability on the other hand. It's the business case. It's there when you count the number of people and the opportunities, but how do you design products that really match your commercial ambitions with affordability needs in these countries? And I think that's where InsurTech comes in, because what we see, all the examples that I mentioned, fundamentally what these people do is leverage new technological development, data, including alternative data, new data, digital data trails from e-commerce, from mobile phones, etc., which exist for about 75% of the poor. Today are digitally included. And new distribution channels that decreases fundamentally the cost, the risk and the cost of serving these customers. So for you who work, for instance, in regulation, that means that open insurance schemes that allow for the transfer of data between originator and the writers and distributors, that foster innovation, etc., are very important. I'll stop there for now.
Thank you very much. And thank you for a broad overview, but particularly for concrete use cases where it actually can help and where it can help close gaps as well. I'm going over to you, Rong, and I'm going to maybe look specifically at one area of insurance where I think a lot still can happen, and that is health. I know you are in Milliman involved very much also on the health side. So what do you see happening there when it comes to AI and machine learning?
Right. So for background, actually, I've worked not only in the U.S., but also in parts of China and Taiwan, Hong Kong, and also try to do some work in Europe as well. As an analytic person, I have seen healthcare, the kind of machine learning and AI, there's actually an acceleration. So over the past 20 years, more than 20 years now, when I first started, we even back then talked about decision trees. I don't know if people are familiar with the kind of the technical terminology here. Decision trees and neural net, even back then, 20 plus years ago. And then fast forward, we're still talking about these things, but what has changed? There are a few things. In healthcare in particular, there's just an explosion of data. Not only in the typical what we call healthcare claims data, so that's kind of the insurance world, but also beyond. So what we typically see, so for example, as Sophie was referring to, socioeconomic barriers, poverty, that sort of thing. So we are, these days as we speak, we have developed analytics that incorporates socioeconomic factors to understand what challenges people are facing, going beyond the typical clinical setting. So for example, when patients are, so they got discharged from the hospital, what's the next step? Do they go back home if the home is ready for them? If they went home, would there be sufficient support to make sure that they take their medications, there's food and nutrition and preventions from fall and slippery and all that? Is there sufficient community support for that? And so information that was limited previously only to the insurance world, if you have access to is within the claims absolutely do not capture such information. So going beyond looking at individuals more holistically, trying to understand individuals as people living with medical condition, but also have other life priorities, that is actually a very significant change these days with respect to artificial intelligence and machine learning and equity. So that is a very big change in these days. So on top of that, if you look at machine learning and artificial intelligence, their technology, or together with the data, they are technical know-hows. They're there to serve service problems. So what are the biggest challenges in healthcare these days are, coverages, right? Healthcare coverages. Even with the passing in the U.S., with the passing of the Affordable Care Act, there's still a significant portion, smaller now, but a certain percentage, 10, 12%, depending on which year you're looking at, of the U.S. population that's not covered. Looking at, say, in countries where there's national health insurance, there are always frictions. Right? So even if there are national health insurance, the coverages may not be complete, may not be adequate. So this is where a lot of the places that I visited, so such as mainland China, InsurTech has stepped in with, of course, support a lot of data, consumer data, data that's indicative or predictive of healthcare consumption, healthcare needs are brought in to support underwriting, good and bad. We can debate, but there's practice like that, as well as utilizing platforms, social network platforms as distribution channels for selling supplemental insurance on top of national health. So these are kind of real. Impactable, I would say, technical advancements. They may do a lot of good, they may also do a lot of bad. So I think that's my 2 cents. Back to you.
Great, thank you so much. And turning to the supervisor, but not yet to discuss the risk of what we just heard, but to say, what are we as supervisors doing in using this technology in doing our job?
So everything that has been said here shows some of the huge potential for consumers, and we're very well aware that there are benefits for consumers, and steps that we take could adversely affect that, so we have to be careful. On the other hand, there are pitfalls, and we have to make sure that we are aware of what those pitfalls to the consumers in our jurisdictions could be. I look at it in 3 categories. So the first is, how much technical expertise and resources do we as supervisors have to understand what all of you have identified as individual interventions in AI? The complexities can make it very difficult to assess the risks and benefits, but we're working on that. In the US, we're trying to gather forces for the various supervisors through the NAIC and share a lot of information so that we're not duplicating and wasting time. We need to understand and evaluate the decision-making processes of the algorithms so that we can make sure that there aren't adverse effects. We need to have continuous training for the people that are looking at the algorithms and the AI. And we need to recognize that the pace of information is fantastically fast, and we need to continuously update our knowledge base. We're never going to fully understand the newest InsurTech on the market, but we have to have an overall general understanding and a way to determine for ourselves that we believe that consumers will overall benefit and not receive some of the bad outcomes or the not anticipated adverse effects. So the second thing I see in these that we need to look at as supervisors is privacy and security. These InsurTechs, everyone has mentioned the data. They have huge amounts of consumer data. So how do we make sure that there are appropriate safeguards to prevent sensitive consumer data breaches or misuse? Another area is data governance practices. Do the insurers have appropriate practices? How about the third parties they're dealing with? These InsurTech companies that are not necessarily under our direct control, but what data do they have and how are they making sure that consumer data is protected? And the third area I think we all need to look at is the ethical questions. So is there unintended, baked-in algorithmic bias in any of these products that result in discrimination or unfairness? We need to ensure that the technologies do not result in unfair outcomes. Lack of transparency of these technologies can definitely hinder our ability to do so. So we certainly are looking at who is it that are offering these, how is it transparent, even if it's only transparent to the supervisor. We totally understand competition. Markets, one of the hesitancies when you go to an insurer and ask for some of the data is, well, wait, my competitor will get it. And, you know, we don't want to do that. We don't want to affect markets because we think that can have an adverse outcome. But we do need to be able to satisfy ourselves that there isn't an adverse effect that hasn't probably been intended, but is going to be, effectuated on consumers. Part of what we're looking at is clear guidelines and standards and frameworks for the use of InsurTech in insurance. These solutions, these AI and ML solutions, go beyond national borders, making it crucial for us all to coordinate and learn from each other. And that's why I'm so glad that the IAIS is taking up this issue through Petra's leadership, so that we can all learn more from each other.
And we can, and I think already I learned a lot listening to the panel just now. Let's see if we can also learn from the audience. Can you bring up the outcome of the post-sale claim management, fraud detection, consumer services is scored where the most benefit could be. And that is interesting because I think when I listened to the panel, definitely I heard more about how you develop the products, how you bring the products. But I think it does coincide with a recent session we had at the IAIS together with the Basel Committee on SubTech, and then the next day my FinTech Forum meeting with industry, where we see that currently in insurance, AI and ML is still mostly used for operational efficiency in the back office. But I do think we heard some very good examples of where it can actually also be helpful on the front end, which then I think builds the case to be conscious of what happens then when it comes to risks. And thank you, Beth, you touched on several of the concerns. I mean, I'm also, of course, from a supervisor, because on the one hand, what you said, Sophie, on leveraging on the data trail and bringing good products sounds good, but how do we deal with privacy? And I think that brings us to the next round, and the next round is indeed what kind of, if you accept that there is really a demand, there's a need, and I think as an insurance industry, we can play a key role in dealing with that demand and actually bringing people to a point in their life that they have to worry less about certain risks. So that's excellent. I also think technology can help, and we heard great examples. But naturally, there are risks, and here you see, at least we lined up 3 for you. I'm sure we can, if we do a brainstorm, there would be more. But while we do this round, please join us on Slido and answer the question. I'll bring it back at the end of this round. And I'll go back to you, Sheila. I mean, you gave some very nice examples on how consumers can benefit. But where would you say is the most pressing risk for consumers from a market conduct perspective when AI and ML is used in the process of bringing them insurance?
Thanks, and it's interesting to hear from most of the other panelists. I think from some of the feedback that we've got, a big part of that would be around manipulation of consumer decisions, for the most part, and then secondly, I'll just couple that with flawed models that usually exclude certain types of consumers. And with this, we've seen a lot around, especially aggressive selling practices in countries like India, Uganda, Malawi, in Papua New Guinea. There are lots of examples that we've had from our membership where you hear that, okay, there are all these interesting products. Some of them are AI-based because of certain modeling capacities, and they're targeting lots of consumers. But given the distribution channels of insurance, you find that you have to often work through third parties for the selling part. And when that happens, usually you find that the information that reaches that consumer is different from what it was intended to be. And that creates additional risks. And these are usually worsened by lack of consumer education or digital awareness of how some of these work, even when it's an end-to-end digital product where they'll just, the salespeople will just come and say, just stop here, or they'll this USSD code to access the insurance product. So in such situation, you find that usually the consumer doesn't have sufficient information or capacity to engage through the entire life cycle or value chain of the transaction. And yet, they got a product and that was that. So usually we see that just having that particular literacy angle or the right information presents a challenge, because we all know even with certain literate groups, insurance can be quite complicated to understand. So we do see that that's one of the things that worsens some of those issues that we see around manipulation, but also seeing examples whereby even when there are legal frameworks in place, possibly as new changes arise, new models and processes come up, there is a gap, like Beth mentioned, either around financial resources or technical capacity, where you need additional support to come in to ensure that these are mitigated. And one interesting example that I did see was in Uganda, particularly when they had introduced microinsurance products for farmers, and there was already an insurance regulatory authority and an insurance act. But from that, there was a review that was done through the Global Index Insurance Facility. There was a review that was done to see if the existing act actually covered all the concerns or protections for consumers in that particular regard. And of course, these were not in place, but thankfully, through cooperation with some of the public and development partners like the World Bank, GIZ, the team was able to engage in development of wider frameworks that later led to amendment of some of those acts. So we do see these challenges around resources or technical capacity, around consumer capabilities in themselves to be empowered, around some of the solutions being quickly rushed to market. And with that, it means that there are processes that are missed, for example, due diligence or sufficient collaboration and liaison processes with the consumers to get their insights or to see how the products will impact them or other key stakeholders within the value chain. So with all these and the issues that we see in place, those are some of the issues that we see that could be still coming up even with AI and machine learning and all these really wonderful innovations that we need to ensure that we are tracking and getting the right insights from consumers to ensure that even as we keep developing these, we are understanding the arising risks around them and how we can collaboratively fix them.
Thank you. Thank you, Sheila. Indeed, I think consumer-centric product development throughout the value chain of that product, but also the life cycle of that product, I think is essential. And in fact, it's giving the right information that is understandable, that can also be understood. So literacy, I think these are all topics that were there, but with the speed as well as the ability of technology to intendedly or unintendedly not give the right information. I think it's something to even focus more on, while you really also focus on what the consumer actually needs when they look for a product. If I say that, and I look at you, Rong, how do you try to build in the process that you actually try to avoid having these risks in the end product?
Well, that's a very tough process. I would say that is a very tough question to address. I think, just if there are many techniques that you can implement in developing these machine learning or predictive analytic tools or even artificial intelligence. But the goal really should be, like you said, consumer-centric. So as an example, when you're using machine learning or AI to decide who gets what coverage and when to drop that coverage, you're impacting human lives, especially these days. There was one recent example of in the US, there are these Medicare Advantage coverages. So one of such health plans decided that a patient who had already been at the hospital for, say, 16 days following a hospitalization at a nursing home. So she basically injured her shoulder, and she was in a lot of pain. She was, at that time, was in no shape or form to be discharged from the nursing home. But the algorithms decided that the average length of stay was 16.6 days. So on day 17, her coverage was denied. And it was a huge negative publicity. But I guess the issue here really is the algorithms are the algorithms. When you're implementing, you have to really keep in mind you're affecting people's lives, and maybe do a further investigation to see, do a phone call with the nursing home to make sure that that is not happening. Okay, so these things aren't really the fault of the AI. You have to look at things more holistically, look at the whole production of healthcare and see where the technology is servicing that production, and not in healthcare we always say do no harm. Okay, first, do no harm. That's the first priority. So if we have failed in that dimension, that's bad. And on top of that, I think that the biases or the robustness of the model or the algorithms really is very, very dependent on the data that it utilizes. Earlier, I mentioned that traditionally we had only looked at what happened in claims. But claims is only when you have an insurance coverage, right, and when there's a utilization. What else is going on is not within your purview, right? So if you had, nowadays, you have a lot more information, then you have a better understanding of the actual situation of the individual, then you would, the intelligence that you gain from advanced modeling should actually help you get to a better or a more informed decision, not, again, going back to do no harm. And that is, I think that's really important. And again, as a practitioner who develops these models, we always want to make sure a few things. One is that, well, you have a lot of good data, so data quality and governance is really important. Number two is you want to make sure that it's compliant, so we compliant, but also meet the institutional priorities. So priorities these days could be health equity, could be climate, and I can talk to how we actually, in recent modeling, we actually see climate impact and health intertwine, and also how they play out differentially by socioeconomic factors. So it's all like these issues are extremely complex, so you have to be really sensitive to the institutional priorities and see, exactly where you want the model to highlight, right? And then the other is it needs to be explainable. That you can do all these fancy modeling, you can throw out the technical jargons at people, but down to human level, you need to explain, you need to convey that key message. So not only to the insurance regulators, the supervisors, but also to those that's in the production, in the value chain, in the ecosystem. So in my case, it would be the healthcare providers communities, and also who they work with, the patients and the patient advocacy groups, and the insurance companies underneath, and so on and so forth. So that's kind of.
Thank you. Thank you. And I like what you said about do no harm. I truly am believe that the wide majority of the insurance market does not want to do harm. They want to help their consumers. There's a few out there that have different intentions, but that's why Beth and I and the colleagues are there. Still, if you go to the wider group that doesn't want to do harm but is using these tools, then there could be unintended consequences. There could be unfair outcomes. And how can we find those? How can we see where the outcomes are actually wrong? And in June 2022, Sophie, the CGAP launched a market monitoring toolkit where you actually try to help regulators, supervisors to identify not good consumer outcomes. Can you tell us a little bit more about that?
Yes, and in fact what I'm going to talk about is the other side of AI. It's much more about how you as supervisors can use AI to strengthen your market monitoring. So we started from, in a way, the recognition that, as has just been discussed here, risk arising from digital financial services are really on the rise in scope and in speed. They rise faster than the adoption of the products themselves, and they affect low-income, less digitally savvy consumers even more, and they go beyond what they emanate from a large number of players, including, as you said, some that are not regulated by you. So our market monitoring toolkit that includes several instruments really aims to help you identify early, proactively, risks that are emanating at the level of the market beyond your own supervised entities to get a sense of what's happening and preempt and also allocate supervisory resources where it really matters. So the tool has 9 different supervisory or market conduct elements that you can consider. Some are very traditional, such as analysis of regulatory reports, analysis of complaints data, analysis of client contracts. But they can be powered by AI, by machine learning in particular, with much greater efficiency than if you put your supervisory resources on them. So the tool helps you understand how you can set that in motion. It has other types of practices that you are well aware of, such as customer service, mystery shopping, and other things. But the one that we've just added is very much focused on AI itself, which is social media monitoring. And we've done that because we realized that social media can be a source of information on customer outcomes, customer sentiments, consumer complaints, and frauds very early on, actually before they materialize in, for instance, supervisory activities. And we've tested, I'm going to give you one example to convince you of this. We tested that in 2020 and 2021 in India, using natural language processing to review social media complaints. And we did that because those who work in that region may remember that there was a big scandal because of suicides, a suicide wave in India following aggressive debt practices. This was not about insurance, this was about credit. And we looked at whether, if the supervisor had looked at social media data ex ante, it could have anticipated the problem, and the answer was clearly yes. So 6 months before the press really put the issue on the table, social media data showed a very rapid increase in customer complaints about aggressive debt practices, and could also have helped the supervisor understand where they were coming from, which app, this was about digital credit, so which digital credit apps were actually really concerned by the problem. So we've developed now a tool to help you really put that in motion if you're interested. What it does is really allow you to, in a way, have your eye on the market as a whole. It's not cheap to put in motion for the first time, because you really need to understand what matters, which social app, which customers, which question to put in the tool. But once it's there, you can use it regularly for a very cheap price. It also doesn't help you really size the market of complaints, because not everybody is on social media, so you don't know what you don't know. But it is a good complement to the more traditional market conduct tactics that you use.
Thank you. Yeah, and indeed, I think, and it's also definitely after what happened, of course, with the US banks and how social media played a role there, this is also something that is now on the radar of supervisors. And I saw an academic article where they literally just counted how often banks were mentioned in the period before that. And the banks that were mentioned most lost 6% more value. So there is something in there, yet I think there's also still a lot that can be done. As you said in the beginning, there's potential, but we haven't fully reached it. Rong, you said it beautifully. AI is a tool, it's just a tool, but it's when you implement it, it impacts people's lives, and sometimes in the wrong way. Going to supervisors. What have we put in place to also address and mitigate these risks, but also to act if need to be, and is more needed, Beth?
So definitely more is needed. Things are changing constantly, and we have to keep our eye on the ball. So just very high level for anyone that doesn't understand the U.S. system, we regulate at a state basis, so there are 56 jurisdictions, those are the states and the territories. But what we do on common issues is we come together through the NAIC, which is kind of akin to the IAIS, and we try to work together on issues that matter to all of us. And this is one of those. We've had working groups on this for about a decade. The Big Data Working Group, I think, was formed maybe in 2014. Commissioner Doug Omen, who's in the room somewhere, I believe, from Iowa, and myself have gone back and forth as the chair and vice chair of that group for a number of years now. But each year that passes, it becomes more important. So the Big Data Working Group was there, and a couple years later, we formed an information task force chaired by Commissioner Gottfried, who's over here on the right, really to elevate the issues. And what are some of the things that we did during that? We looked at, governance processes for data privacy. We looked at informed consent for data usage. We looked at a bunch of unfair discrimination areas. And we adopted the AI principles in 2020 under that task force, which were very high level, stated that AI systems should avoid harmful and unintended consequences and should correct and remediate any consequences when they occur. And that couldn't be, I'm summarizing of a summarize, but those are generally the principles, because one of the things with overly prescriptive regulation is that we could interfere with any of the things that people on the panel are talking about today without meaning to. We don't want to provide something that consumers can't have when it is beneficial to them. But we have a duty to make sure that we can avoid as many unintended consequences as possible. So after the AI principles, we continued to work on other ways to look at the industry. And last year, or I think it was 2022, we elevated again this issue to what we call a letter committee. So again, there's only 8 letter committees, so that shows you how high a importance we think that this is. And the letter committee is chaired by Maryland Commissioner Kathleen Boulain, who's right here in the third row. So this kind of shows you, by the way, the breadth of how important this is throughout the United States, which is a very large country. We are diverse geographically, and yet we all feel this is a very important issue that we have to get right. So what are we doing right now? Well, we are drafting a bulletin that we hope will have some high-level principles and some guidance for companies on what we expect. Things like you mentioned, an algorithm that cuts off treatment, that is so inappropriate, but that's the kind of thing I think also that helps companies to understand you can't just put this in, set, go, and let it make decisions without some level of intervention. Those are the kind of things that we'll be describing in the bulletin. So the next question for many people in the audience would be, when is that bulletin coming out? We hope pretty soon. We have been working on it internally with regulators, but that will be exposed to industry and all other interested parties for comment, really sometime this year, in the next month or two. We're hoping that it will focus on government's requirements and that we'll get some really good input from people who are using these systems. If we have a sentence in there that's wrong, we want to know from you. We want to know how this will affect what is being delivered to consumers. But we feel very strongly that it is our duty to make sure that we avoid as many unintended consequences to consumers as possible while still allowing all the benefits of AI and ML.
Thanks, Beth, and definitely looking forward to that bulletin, and I can fully appreciate that you are also looking forward to stakeholder feedback. When we in the EU developed our principles for ethical use of new technologies, we did that actually also jointly with industry. I think here we can help each other, and I also recognize that going back to this roundtable we had in Basel with also banking and insurance, when it comes to concerns on these technologies, it doesn't matter where you are in the financial industry. And at that table, I realized it also didn't really matter where you are in the world. I think there's some challenges that we are all facing. But the good thing is that we share that unintended consequence is not what we want, at least the vast majority. So I asked at the start, because I'm at the end of the second round, almost. We are. I ended with you. I'm also mixing up. No, we are done. So we're going to go to the outcome of the poll. Thank you. Let's see where we are. Ooh, that is very close. Yeah, so this is slight majority that says behavioral nudging and manipulation of the choices. I think that is also what Sheila was referring to. but the exclusion and also bias is, I think we can conclude that all these three risks are very much top of mind, and I think that very much reflects also the discussion we just had. Moving on, then, I think, because then how are we going to address this? So what aspect of AI and ML adoption by insurers should we then focus on? And I think that is a nice question, because we see that actually we think everything is important in the previous question, but then what do we as standard setting bodies, as the IAIS, but also supervisors, where do we start? So looking forward to your answer in this final round that we will discuss. I'll come back at the end. But going back to the panel, and I'm going to stay with you, Beth. So I'm going to turn it around a little bit. So what can supervisors do to ensure that InsurTech and AI/ML can be used and can be used to continue to benefit the markets while we still manage these risks?
So one of the things that we found when we first started looking at this almost a decade ago is we need to understand what's out there. We need to understand what InsurTechs are developing and how insurers are using those. We need to identify the emerging risks and establish the appropriate guidelines. So we really did not jump right in with all the feet, because while there were obvious consumer harms, such as what you mentioned, that are easy to address, there are other things that are much more subtle. Over-regulation could prevent the benefits, and under-regulation could provide more consumer harm. So as I mentioned a little earlier, we are working together through this standing letter committee. In that letter committee, one of the things that we tried to do is a number of different committees are looking at this. So we have a health committee, they're looking at it. Property and casualty, everyone's looking at it, right? It's in every aspect of insurance. So the letter committee is providing a forum for state regulators to have discussions relative to all of the topics. We created a collaboration forum as a platform for multiple NAIC work streams to come together and discuss what they're doing, so we're not overlapping, or if we are overlapping, we understand the overlap. We have discussions relative to cybersecurity, so we're talking about AI and ML here, but cybersecurity is also very important. We have discussions on that and what we're doing in our individual states. Data security and privacy protections, and innovative products. And again, we're working on this model bulletin, not to oversell it. Now everyone's going to be like, where's the bulletin? And Kathleen, I'm sending them to you. But we're working on the bulletin with all of these thoughts in mind. So we've been discussing this in a lot of detail, and there's a real diverse set of opinions within the United States. And I think all of those opinions hopefully have been heard, have been expressed. I'm assuming they've been expressed, they've definitely been heard, right? And we're trying to bring something together that will be satisfactory to all supervisors, protect consumers, but still bring the benefits to consumers.
Thank you. And definitely, I understand what is out there, and that's risks and insurers, but it's definitely also understand what the consumer that is out there, not just to understand their needs, and indeed AI can help even to identify the needs, but also to understand how far can you go expecting that consumers themselves can deal with the risks. There's a lot said that we need to do more financial literacy, more financial education, but isn't it the case that even if you do that, there is still limits to what you can expect a consumer can actually do him or herself to address these risks? So I'm going back to you, Sheila. If you look at consumers and their role in this, to what extent can we expect them to also take responsibility, inform themselves, and make good decisions, and where is it really too much unbalanced information for a consumer to actually be expected to be able to do this him or herself?
I think for consumers, we have to be mindful to ensure that the consumers are not burdened with having to protect themselves against products that are meant for their value or for their maximum benefit. So I would say the expectation for consumers to protect themselves should be minimal, or aligned with a collaboration with other actors within the ecosystem. And for me, that this is really very, very important. And I know Sophie may speak about it later, but it's very key that we do have the different players at different stages play a key role in ensuring that the consumer is not overburdened and is protected. I'll also borrow what Rong said about do no harm. From our standpoint and what we've heard from consumer representatives, usually the design process of insurance products or most of the innovative digital finance products that are coming up is in such a way that sometimes the regulator will be able to interact with the provider, as we've seen in over 50 RegTech or regulatory sandboxes. But even within that framework, the regulator is meeting the provider and they're designing for the consumer who's usually not on the table. So even in that setting, you realize that the consumer is expected somehow to be informed or to ensure that the product is in such a way that it benefits them without having been part of the design process at any one time, whether through their representatives or just getting insights on what works for them. And from the start, I did say that we've seen 88% of insurance consumers demanding more personalization. And to get there, we need to know the information about the consumers. What do they need? What are their risk perceptions? How do you ensure that you design with that in mind? That you have safety by design, trust by design, empowerment by design. And those are all key aspects that you can be able to generate when you ensure that as these design processes are happening, the consumer voice is there, is at the table in those processes. And for me, I would see this as a low-hanging fruit for market conduct supervisors and even for solution designers, because if you have this at the start, we won't be panicking to catch up later on, because at least most of the design will be made with insights that have come from the consumers or even tested and prototyped along with them to ensure that the risk mitigation factors are incorporated. So I would say that this is an all-round effort. The regulators are there to set up certain policies or to require that underlying indices or product design methodologies are clear and that the regulations or policies put in place are protecting consumers. Then the providers are there to ensure that the products are designed with risk mitigation factors, not just at the front end, but at the back end as well, since they usually have the capacity to actually monitor certain things like fraud detection or ensuring their right mechanisms for redress. And then the consumer as well, ensuring that when information is sent out, they actually use it well to make the right decisions. So I believe that when we all come together to play our part at the different points, we shall end up with a fairer and safer, more sustainable ecosystem.
Thank you. Collaboration within the ecosystem, including the consumer-centric approach already from the very start, thereby getting to safety by design, trust by design. That brings me to those who are designing and building those products. Rong, what do you see is needed to benefit from the technology, but at the same time make sure that we actually have that outcome for consumers?
I think technology will always advance. So like I have been trying to catch up for 20 plus years, right? But I think one thing is that that it needs to really to be explainable and transparent. You know, as like a developer, and I have seen places where, you know, a proprietary tool gets used, and then you know, for paying health insurance, we'll call it in the U.S. we'll call it capitation payments with health plans. Basically, the health status, as determined by a proprietary tool, will be used to determine how much money a health insurance company receives from the government public program payer. Right? So things like that actually gets multiplied very quickly. So because it's not transparent, people don't really understand why they're receiving, say, suddenly a much lower capitation revenue, and then they also don't understand why it fluctuates so much, and while they're looking at relatively at a stable population, you know, things like that. Then you can see that health insurance companies they're supposed to be more savvy in terms of data and analytics and insight, and then they couldn't explain. Then going down further is the health insurance, the health systems, the providers, they're struggling, and then, you know, So it just very quickly it multiplies. So in my opinion, I think as a developer, the first priority is that you want to develop something that you can explain, you can stand behind it, knowing that it's not perfect. And then I think also as developer, you need to work with the insurance regulators or supervisors to make sure that where you know there are issues in the methodology, you know that the methodological issues aren't going to be resolved by your own methodology. You're not going to heal your own problems. But then have the market develop additional mechanisms to complement. So for example, if you know that by this methodology, certain types of population that you definitely want to protect are not receiving enough healthcare resources allocated, then work with the regulator and say that we'll squeeze out some additional budget outside of this methodology to compensate. I mean, knowing that that's transparent, but don't be afraid, know that you can be protected, but also know that the unintended consequences actually could have been avoided if you make it transparent and work with the rest of the market, the ecosystem, to address that. I think, we have, like in my career, when I could just recall like many instances where I could either be on the developer side or on kind of the independent evaluator side to look at a methodology and to say that this is not perfect. And then we can congregate a panel of experts. So there will be medical professionals, the insurance executives, the regulators, and consumer advocates. So we all come together and then say, what are the issues? And then we prioritize and develop a problem list and say, version 1, this is what we're doing, knowing that we'll have a version 2 to address some of these issues down the road. This is actually how we implement it, or how I led the implementation of a very kind of a risk premium stabilization program in Massachusetts. We actually met with the stakeholders on a monthly basis to collect all these things. A lot of times, my job duty was to explain, as the developer of these complicated formulas, to explain what it does in layman's language. It was hard, and then it took time to really get people to understand what was going on, and then to get them understand where they could be comfortable, where they could be less comfortable, and then go to the next level. So I think that this is the implementation. It requires a lot of education, transparency, and all that. But it takes a village to really make it work. It's just, we're, as the developer, is only a small cog in this big machine here. So that's my perspective.
Thank you. I hope we didn't lose Sheila, but I can say she was nodding very, very firmly when you said you need to be able to explain it, and you need to be able to and willing to stand behind what you developed, even if it is imperfect. I think you all touched on collaboration, on the need to work together. And that brings me then to you, Sophie. If you hear this, if you listen to this, so what is needed to bring that interaction, that collaboration, cooperation, how do we get that together?
So I think what we really need, what we're really talking about in a way, is a conceptual shift in how we conceive consumer protection and market conduct today. And I want to get there maybe by backtracking first. So we've all talked about the potential, but also in a way the huge risk that come from digital financial services. Just to give you some numbers, because we haven't talked about numbers here. We've done in 21 at CGAP a global research on digital financial services consumer risk, and we identified 66 different types of risk, which we've categorized into basically the following categories. They correspond to what was discussed today, but fraud, data misuse, which include algorithm biases, lack of transparency, which we talked about, inadequate redress mechanism that we haven't talked about much, but that's also a big problem. Agent-related issues, which we haven't talked about either, but that's also a massive problem, and network downtime, which sometimes prevent people from for instance, making a payment. So these risks are growing fast in scope and in numbers and in scale. We just released last week a publication on the scope of risk just in the YMU region in Africa. And I want to give you a sense, I'm mentioning this because I think that would raise the bar even further in terms of the importance of the topics. In those countries, more than 80% of people who are using digital financial services of any sort have said that they had some of these risks that I just mentioned happen to them. So 80%, that's like massive. And 40% said they lost money because of what happened. So it's just really the majority of clients at this stage. So we just really can't ignore the problem. Now, we think we need to completely rethink about how we think about consumer protection. And if you think about the evolution, we started many years ago by thinking that we needed to put the onus on the customer itself, right? It was about transparency and the customer being able to make the right choices. And I think you've heard everyone in this room say that's just not possible in today's world. The consumer is just not equipped to understand what's going on or to anticipate, cyber risks that come from even outside their own countries. And I think Sheila explained that very well. Yeah. Then we moved to, and IAIS was one of the leaders in doing that, moving to what we call the customer-centric consumer protection framework, which basically put the onus on the financial services provider. And your role as supervisors was really to impose the right standards and to monitor that they were implemented. And I think that remains fundamentally important. And so we heard Ronnie said, that's absolutely important, how you design a product, how you ensure transparency and clarity, etc. But it's not sufficient anymore. It just isn't. Because financial service providers themselves and regulators themselves can't anticipate everything that's happening, the form, the shape, the nature of risk, because not everybody is supervised in the first place. Risk can come from a partner, a third-party partner. It can come from across the border because MMOs, etc., work across. And also because there is a societal element. When we talk about the ethical risk, it's not one FSP at a time, one financial service provider at a time that's going to be able to see, spot, and mitigate biases that may affect the whole market, the whole population. So for all those reasons, we think we need to, in a way, rethink consumer protection and provide much more of a holistic approach to consumer protection. We call it developing a responsible digital financial services ecosystem, where basically all actors in the system would play a role in behaving in a responsible manner. And when we say all actors, it is the consumer and the financial services providers, of course the regulators and supervisors, but also the consumer protection agencies. I'm very glad that Sheila is here, that we already collaborating with them, but also regulators and agencies responsible for other sectors that interact as third party or suppliers or in any other way with the digital financial services we're talking about. Mm-hmm. And we think that is a fundamental shift, because we really need to rethink our role as regulators and supervisors in that context. We think there are three principles that need to apply. The first one is to maintain the customer centricity that has been prevailing recently, but bringing that yet to a higher level. It's not about just protecting them from buying the wrong product and being subject to a lack of transparency. There's many more risks that the consumer is facing, and that we need to understand, monitor at market level, bringing this ethical element in place, etc. So that requires new tools, new objectives, new monitoring variables, etc. Secondly, it requires collaboration, as everybody has said. You will need to work with other agencies and with many more actors to really be on top of the risk. And so we need to think about how we put these channels of collaboration in place. And the last is competencies. Even though, I think, as you said, Ronnie, nobody will ever be on top of what's coming next because it's just accelerating so fast. We cannot afford to stay behind. So we also have to bring our own skills up to speed as much as we can, and that requires resources which are often not there. So we're testing that concept of a responsible digital financial ecosystem in several countries now, and we hope to be able to develop in a way a conceptual framework for what it could look like in terms of avenue for collaboration, tools to use, objectives to set up, etc. But we think there's a lot of work that is needed. And at the same time, we remain very optimistic that the opportunity can be leveraged, right? This is not a negative spiral we're in.
I think it's always good to be ambitious, and there's enough
and prudent
to do.
At the same time.
Exactly. Thank you. I think we touched, I think on indeed in the panel on most of the three principles that you identified. Quickly going back to the audience, where should supervisors focus on? Model risk management and governance is on top there. And interestingly enough, when we asked the roundtable on SubTech, model risk and governance was also the number two risks, that were mentioned. Fair use of data comes up a lot, of course, and then the others go down a bit. At the bottom, model development, validation, implementation, although it goes to the core of what you said, Rong, you need to stand for and be able to explain what you produce. So, but you have to do that together. We did that here in the panel today, but we definitely can also do it on the floor, because I think all groups are represented, and I'm particularly really happy that IAIS is indeed involving more and more also consumer organizations. So excellent to hear the perspective from Sheila. I do have time for a question, if there's anyone who would like to ask a question. Looking into the room. Yeah, I see two. Let's take those two questions and then finalize and go for lunch. Yeah, if you can start by saying who you are, sir, and then.
Should I start?
Yes, please.
Thanks. I'm Bernie Birnbaum with the Center for Economic Justice. It's a consumer organization based in the U.S. We work with colleagues around the world through the Transatlantic Consumer Dialogue. So I wanted to follow up on the excellent comments about monitoring the market. Within the insurance life cycle, we have marketing, underwriting, pricing, claims settlement, anti-fraud, risk prevention, and customer service. And everyone has recognized the essential role of insurance for individual and community economic development, loss prevention, and recovery in an era of climate change. So when we talk about a principles-based or a risk-based approach, which of these risks should be a higher priority? Should it be marketing, underwriting, or pricing that exclude most in need of insurance? Should it be claims settlement and anti-fraud that denies a fair benefit to the policyholder? And I think the obvious answer is that all of these are great risks. It makes no sense to ask an insurer or a supervisor to prioritize those risks, because they're all cataclysmic risks for the consumer. So a principles or a risk-based supervisory approach really isn't the proper way to go for supervising AI and big data. A meaningful supervisory approach requires the comprehensive market monitoring of actual consumer market outcomes, because it's only in this way that you can actually track what these algorithms are doing. The fact that an algorithm intends to do something is no guarantee that it will do something. So a second requirement is that insurers have to test for unfair discrimination. A third requirement is that a guardrail has to include not just explainability, but disputability. It's not enough for somebody to come in and say, here's how our algorithm works. You have to be able to track an outcome to a particular data source or a particular mechanism. So it's those guardrails that should be implemented as soon as possible. And I was wondering, what's the status of market monitoring today?
I'm looking at the panel. Beth, do you want to?
Well, Bernie, we've spoken quite a bit about this. I think a lot of that is already in place, whether it's AI and ML or other types of insurance. For instance, if you had a policy in my state and you received a rate increase, we would demand that the insurer explain that to you, whether they used AI to develop the rate increase, but we would demand that they tell you what factors were used and what factors had the largest effect on your rate, just as if AI and ML didn't exist. We have always demanded that. And I think most insurance departments do that. We have to keep our eye on the ball, no question. But I think that there are outcomes through the insurance regulator, through insurers, to resolve some of these disputes. And I believe, Sophie, you said at one point, the ability to resolve is extremely important too. It's not just identifying the risk, but what can the consumer do? I think a lot of that is in place, but maybe not identified as an AIML. I'm not being able to say these letters. I think a lot of that is in place, and we will simply have to morph it as technology moves forward to continue to protect people.
Thank you, Beth. Yeah, I fully agree. And for example, in the European market, it's not only the AI Act that is just adopted, but there's also an AI Liability Act, which addresses the redress issue that you need to have also when you use AI. Going to the second and last question.
Yes, this is Jad Harris from the Geneva Association, a think tank dedicated to
Hi,
the
Jad.
insurance. First of all, let me thank you and congratulate you on an excellent panel session. Maybe linked to the fact that there is no gender parity, all females.
I'm sorry.
It's an outrage.
Women in tech.
More seriously, Sophie explained very clearly how technology allows to reach out to more customers and protect more customers. One topic we haven't touched upon is the way the value is being split between the customers, the insurance carrier, and whatever it is, the InsurTech, the telecom companies, etc. And as I'm sure some of you are aware of, we sometimes see examples of business cases where a disproportionate part of the value is being taken from the distributor, the telecom company, for example, or the InsurTech, and where the loss ratio is very high and the distribution cost is very big, which is counterintuitive when you think of technology. So how important is this topic on the radar? I'm turning more towards the supervisors, but there is, even though you reach out to more people, the case for the end customer maybe is not so strong.
Thank you, Chad. I can also say a bit as a supervisor. I think two things. First of all, supervisors should be technology neutral. And that really means that whether or not you're using AI, ML, a spreadsheet, a very nice talk on somebody's doorstep to sell the product, the same rules should apply for the same risks. I think that one is essential, first of all. And then if you look at what you want to achieve, it's value for money, and it's pricing for the risks you are actually insuring, plus costs that you are actually making, and that needs to be explained from the moment you produce the product, so the manufacturer as well as the distribution, and that all in total should result not only in a fair assessment of cost. If you make cost, you can charge that, but ultimately also in value for money for the customer. And this is a core topic currently on the agenda of the supervisors, at least in that I represent. But you want to add something?
I can say ditto.
Yeah.
It's we are focused on the risks. The risks are changing with technology, but the risks are not changing in that explainability. We look at rates to make sure that value is being delivered to the consumer, that the product is providing insurance, and that exists whether it's AI and ML or a paper-based form, and we simply will adapt as new technology comes out.